The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 24th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes. Underscore that, folks. And what I know is we should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way for us to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the good in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in. Now's not too soon. 877-927-6648. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den. Just go ahead and ping me. Send me an instant message, and I'll get to anything it is that you are looking for. So it is good to be with you. Sorry for that slight delay out there as I was getting things set up. You got to love Microsoft. I think we would be better off if Skype had stayed separate from Microsoft ever since I have installed Windows 10 on this machine and we get things going. I boot up Skype, get ready to come on the show, and boom, everything just freezes up, and that means I have to restart everything, which is not a good, fun task out here. In any event, we're with you for the rest of the hour. Let's hope, knock on wood. I'll just knock on my head out there. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading off 20 points at 18,527. So we're not really a lot of activity between yesterday and today. So really, I'm going to need a lot of calls, a lot of emails, a lot of pings out here because it got really a quiet market. I was working on something special. Well, I was hoping that it was something special just before we came on the air. But now that the system is frozen, all those files are just probably trash. And I'll have to probably look at that after the show or maybe tonight. We'll see if it's a tool that's worth anything anyways out there. But just something to look for in the quiet market. You know, how can we find maybe the best signal when this juggernaut is going to bust loose to one side or the other? But in the meantime, the S&P is down about 3 points. Composites off 5. Gold is down $16 right now. Silver's down 40 cents. Light sweet crude off $1.37. Individual stock-wise, leading the charge to the upside, you got Chipotle, CMG, the ticker symbol up $8, 2%. Puma Biotech up 10%, up about $6. PDC Energy up about 8%, up nearly 5. Lannett Inc. up 15% or $4. National Beverage Corp. Hey, let's go have a beverage, an adult beverage. Yeah, that's what we need. This one's called Fizz. I don't think that's. I think we had the A Fizz, the adult beverage. We didn't want to drink too many fizzy drinks, do we? In any event, that's up 10%. Hey, to the downside, you've got AutoZone down $12, Priceline down $6, Dycom Industries down $6, Lazy Boy, little lazy, down 14%. That's off $4 and change. So. To begin the show, where do we begin? Let's try to figure out what it is that is moving here to the upside. Let's take a look at the general markets, try to figure this out. If you're watching us on Tiger TV, you're looking at Stevie's Perigee. I thought it was Perigee chart that came in a couple of days ago, August 22nd out here. And we can see at this stage here, the ES Mini that was tested earlier during the day, that thing is held. 2180 is the number there. Looks like the NQ tagged it right to the tick out there at 4804. We need to see price close below these levels in order to start to saying that maybe the sellers really do have control. When we get back from this break, let's go take a look at the advanced decline oscillators. I'll look at see what emails I've gotten from all of you great listeners out there, and we'll take a look at everything. This is Steve Rhodes with TFNN We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So if we take a look at maybe, it might be the most important chart for us to pay attention to with these quiet markets out here, it's really the intraday charts, that intraday charts that we want to focus on. And earlier at about, let me tell you the exact time, 3:30 this morning, I think this is the more important candle out here, and that is this little hammer candle that formed at 3:30. The low of that, so you want to be paying attention to this, is 4805.25. And this area here has held. If that breaks, and I don't know whether it will be with volume or it won't, but if that breaks, then when I say break, we see a close below. Then what that would likely set up is an A to B equals CD to the downside. Now that's after forming a nice seventh wave move that you and I took a look at yesterday to the upside. So that's our A point. Our B point's the low of the hammer candle. And then there was a retracement into about the 5:30 time frame this morning. Now, don't get your skirt in a tizzy here. The one-to-one price projection on this is 47.92. That's logical. as far as as where price would then find support, because you've got some nice bullish candles down here on the NQ. You got a little bullish engulfing candle right at about that price point, and that's about 10 o'clock in the morning. That was on the 22nd. You can go back a little bit further to August the 19th and 20th. Was it the 19th? I don't know which day it was here. It tells me I've got to do something. What do I got to do? It was the 19th out there, and that's at 47.83. So, and if that area holds, then we're really just stuck in a bit of a trading range, it looks like today, between 48.05 or so and the 48.25, 24 range, somewhere right around there. And that is more likely the outcome. But I want to be able to give you two outcomes. It doesn't look like, I don't see a pattern here on an intraday chart that suggests that the markets are going to move beyond the 48 and a quarter-ish type range out here. So narrow range again. And but to the downside, I would say the NQ would be the one that would give us the biggest signal out here. Now, I mentioned that we should go take a look and see what the advanced decline readings are. And I do want to thank those folks that have already sent in emails, such as John. We're going to go try to take a look at his, it looks like 3 or 4 requests out there. So we'll take a look at John's request. I've got several others that have sent in, so thank you very much. But first, let's just take a look at, what is the message out here? Inside the New York Stock Exchange, the message is still that sellers are in control. They have been in control for a long time. Now, this is a little bit of a dangerous scenario out here. If you're watching on Tiger TV, I sure as heck hope you are. Now, what do I got to do in order to make this happen? Okay, I've got to change the time on this template. So give me a moment to do that off chart here. So what the heck? Apply this to the current page. Let me see how this works here. See if that helps. Like, there we go. So that populated it. Now that's probably going to slow my system down. What I'm showing you, here's what I'm trying to do for you on the New York Stock Exchange. And there's not an ETF for us to trade it. Maybe that's for good reason out here. And what I'm doing is I'm blowing up the bottom portion of my screen out here. So we're taking a look at the very bottom panel, the advanced decline oscillator reading. It's taking a look at the daily advances and declining, and the blue line is showing us the difference between two exponential moving averages, the 19 and the 39-day exponential moving averages. When the line is below your green line, the zero line out there, the presumption of evidence says that it's sellers that are in control. You can see that we have been below the green line, the zero line, since it looks like July 25th out here, July 25th or July 26th. Now, that is impacting the summation index, not to confuse you or anything, but that is panel number 2 on my chart. That's when it looks like it's a little Christmas line out there, right? We've got a green and a red. Green because it's moving up, red because it's moving down. And in this case here, this is just helping us to also understand, it's summing up all of the previous advanced decline indicators. But here's what I want you to pay attention to. Typically, this follows the market. If you watch this, I'm going to explode this up a bit here. So here's if you take a look at, for example, where my cursor is right now, and I'm going back to February 16th, see how when the market turned up, so did the summation index out here. When the market started to turn down just a bit, we go into the red little line out there, turns back up, it turns green. Red, it starts turning down. Green, it starts turning back up. See how this flows? It's a nice little flow out here. Well, guess where we're at now? This thing, well, you already know that answer, right? Since July 26, 27, this thing has started turning down. And what has price been doing? Basically, price has been going sideways to higher out here. So we've got a divergence. And the question would be, I'm sure somebody just said, well, geez, Steve, does that mean anything? And the answer to that question is, well, it doesn't happen that often. Yes, it does mean something. We have to go back. I believe the last time was in 2015, the most recent example, which was right around here. Let me see. Was it right here? Yeah, so it was right here. Yeah, I was right. So it was right around April. How's that for a memory out here? April 29, 2015. See how the red line, the summation index, started moving down, and take a look at what the New York Stock Exchange did. It was, in essence, moving sideways, very much like right now. And it certainly turned out to be, some type of a retracement. In fact, that's what led to the lows out here in August of 2015. So we have a similar type of scenario that is set up as we speak right now. So, what does this mean? I had to go with the evidence. Now, this is on the daily chart. if I switch to a weekly chart, I'm not going to do it right here because that will just totally mess everything up for me. It's really unusual to see them on a weekly chart. I will let you know, I will share with you that we don't have that pattern on a weekly chart. But when we do get that on a weekly chart, it's a big thing out here. So it doesn't happen often. It is unusual, and it is present right now. But again, we can't really trade the New York Stock Exchange out here until they come up. Somebody wants to come up with an ETF for it. Then why don't they? Probably a bunch of reasons out there. But let's not go into that. Now, if I take a look at the NASDAQ composite, see how you can see here little green lines in the summation index out here. Well, you know, it tells us that the price oscillator is also above zero. So we've got conflicted market messages. That means that even I am then therefore conflicted, because I like to have clear signals. Do we have clear signals as we speak right now? We don't. So where's the next clear signal really come from? I would have to say, and then I'll get to those emails and everything else out here, because I want to make sure that I leave you with the most important morsel, a tasty morsel out here, of course. We're going to take a look at the VIX index. And here's what you and I know right now, and that it's trading out at 1307. But it's that red line. It is the red line that you would pay attention to. You won't be an individual to say to somebody, hey, if you cross that red line, then I'm going to do this. Actually, you're going to say if you cross that red line, you are going to do this. And I would say go ahead and switch to all-out short inside of the market, at least for a period of time. And we're not that far away. I know I can get this out. Right now, the 50-day exponential moving average, 1341. A high today, 1329. We're not there yet. I don't know if we do, and right now it's still resistance. But getting above that level, that's going to go ahead and start to trigger a significant move to the downside, at least in the S&P 500. So that, I think, is those two elements, but this one is the most important one. We've got the hammer candle on a 30-minute chart, so you know what's going on intraday. And on the daily basis, we've got the 1341 level inside of the VIX index. Other than that, not a whole lot to report on, but that was information worth showing up for today. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's start to get to the questions that have been rolling in here. Several with regard to the gold miner. So John was the first one in. So John gets credit for asking. And his specific question was with regard to dust. Before we go take a look at dust, we're going to come back to this chart here that you and I have been following for the last several sessions. That is the GDX. So in essence, which is going to give us a little bit better information than dust out here. So here's what we know about the GDX. Number one, been in a nice little rising price channel ever since January, and that rising price channel has now broken. Prices below that level. Prices testing a swing point. That swing point is a trading session of July 25th. That has volume of 89 million shares. We are at 43 million shares as we speak right now. So here's what we know about the GDX. It's testing a swing point with lighter volume. Has it actually tested that swing point low? I don't know. Let's go find out. So there's the yellow line. That's what we're paying attention to. The answer is no, it has not tested it. Would suggest that as long as it closes inside of 28.35, that it's going to go test the 27.45 level. So that's likely to occur. You're coming into a swing point with light volume. What else do we know? We know that price is right now down, testing its TAS daily profile low, 26.86 out here. You're trading just below that. Well, you're trading at 27.7. Oh, hold on. What the heck? Let me make sure I give you that. So 27.86. Hopefully that's what I said. And if I didn't, I'm telling you right now because I was looking at the wrong thing. 27.86 is the bottom of that task box. We're trading at 27.77 as we speak right now. So that's under pressure. And in fact, may hold out here. Now, I'm going to throw a doozy at you, John. I'm going to throw up here something that I don't really share that often, but think that it's pertinent to share right now. Here's another indicator out here. This is one that was developed by E.W. Dreiss out here, an Australian chap, lad, right, who is a commodity trader, and he developed a little tool, little indice called the choppiness index out here. And pretty cool tool in that the upper threshold level is the red line that also measures the 61.8% level. And the bottom line, where you can see prices at right now, measures 0.382. You can see we're actually trading at 38.21 right now. We're trading right at it. Now, what's the importance of this line here? Well, the way that it works is when you get below the 0.382 level, or 38.21 in my case, with regard to how I have this indicator here working, that is when present trends, start to come to an end. Doesn't have to say today, but they start to come to an end. When the line is above the red line, that tells you that's when trends are about to begin. They begin when you see the move back down below the red line. So the most recent example that I can give to you, June 23rd, you can see that this wonderful indicator was up at the high, up and above the 0.618 level. Okay, this is not a directional indicator. This tells us when a trend, doesn't tell us which trend, tells us that a trend is about to begin. So in this case, that actually was a bottom back on June 23rd. Price moved higher, right? Price moved higher until it ran in the top not only of that rising price channel, but when that indicator got back down below the 0.382. And then what did price do? Inside the GDX, the trend came to an end. Price just continued to move sideways out here. So we're getting some indications with regard to this nice dust trade out here, and I could give you a ton of reasons why gold and silver ought to head down in a big way out here. Just be careful. You're coming into levels, you start to put all these tools together. Now, what does that really mean, though? Just be careful. Here's what I would expect to see if we're going to see some type of bounce. I would expect that we're going to get some type of rejection, maybe a test at 27.45, do it on light volume, and we're going to have price try to get back inside that rising price channel. If it tries to get back up there, that's at about a price level of about 28.75 or so. If it tries to get up there, it can't get in there, then we may have seen a true change in trend inside of the mining equities. And it's important, John, for us to take a look at the GDX because in the case of dust, I'm not going to get that same type of, because all the reverse splits and all that stuff out there, you know as well as I do, dust never sold for $220 out here or $208. This is just all these reverse splits out here. So, what it means is that it's really poor information from a technical trader's aspect for me to tell you, with any kind of certainty what it's really going to do out there. And I know you spent the time to write in. You really want me to give you, a good response. And that's why I say really pay attention more so to the GDX or the HUI or the XAU than with regard to what dust is doing. Now, where does dust have resistance at? It says its weekly market profile is $7.06. You're trading right now at $6.76. So I hope that helps you. He also had a question about Watt. What's up? No, WATT. Energis Corp, I guess is the name out here. Now we're going to go ahead and turn off the old choppiness indicator out here, and we're going to go ahead and this is a nice looking Stark chart out here since it formed a bottom back in January. Now I don't know what Energis Corp does. I guess we could find out. Maybe somebody at the den will just go ahead and tell me. But this thing is moving higher, doing it with decent volume. Now, decent volume in this equity is 1 million shares. You're 931,000 shares as we speak right now. There is a B point of an A to B equals CD out here, and it was a bearish reversal signal, key reversal, bearish engulfing, the whole 9 yards that price is over. That's the June 13th session, 2.2 million shares. So you're up above that level on lighter volume. So we can't really say it's going to complete an A to B equals CD to the upside, but I can say on any pullbacks, you would be now looking for the price level of 1478 to act as support. And, and that's what I would be looking for. Let me put this on a weekly chart. That way it'll take us back to the left. We'll see. Well, how about this? So this thing is also, John, made a 100% move out here. That's what it's doing, maybe breaking out above that area, but takes a lot of energy to do that by getting back to the highs from March. This is a weekly chart we put on March 31st. And that was at about $12 out here. No, 16.44. What the heck am I smoking? Not smoking anything. 16.44 is the number. So just be careful. Weekly wise, you can see we're up in that area on light volume as well. I'm not saying to get out, but I am saying be careful. That's for sure. 16.44, because this could be an area where you'd start to see a pullback. That's all. So that is for ticker symbol WATT, and that was for our man John, the super sailor out there. Let's go take a look at ticker symbol ARR for Ken in Wyoming. Ken, thanks for sending in the request and the email. My pleasure to go take a look at Armor Residential. Armor Residential right now trading out at $22.42 out here. So let's try to figure out what this is communicating to you and I. Let me come over to one of my other charting systems out here, punch that in, see if there's anything that pops up for you and I. And just kind of confirming my first look here. So here's what we know. I don't know how long you have been in this, or if you're in it or looking to get in. Here's what we know recently, and then and this is on the daily chart, and then we'll take a look at the weekly chart. So recently, we know that this equity here made a high back on August the 10th. Nice little bearish engulfing candle that had formed out here. Then it goes ahead and gaps down on August 11th. Not anything huge in the way of volume, 566,000 shares, so it's made a high with 596. That is your level of resistance right now, that little gap to the downside. This could be forming an A to B equals CD to the downside. And Ken, that would give you a price projection. Let's see if I can do it before the bell, before they kick me off the air here. That would give you 1-to-1 at 21.22. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're taking a look at ticker symbol ARR, Armor Residential Real Estate Investment Trust for Cannon, Wyoming. We were looking at the daily chart before we went in that break. We were saying there's a possibility of a formation of an A to B equals CD to the downside. Now we've switched over to the weekly chart. It has a little bit different message than the daily. Of course, it should, because it's a weekly chart out here. So, Ken, the levels that I want you to focus on and pay attention inside of ARR is really two different levels. First, let's take a look at the A to B equals CD pattern on the weekly chart to the upside. In our A point, this nice little hammer candle had formed down here on the week of January 18th, 2016. So that becomes our A point. Our B point is the swing out here, the trading session that began April 11th, makes a retracement. Nice little bullish engulfing candle as well. Down on the week beginning June 27th out here. So it looks like to the upside, what ARR is trying to do is get up to the price level of 24.17. So ideally, this would make that A to B equals CD pattern to the downside, give you a nice entry point so that you could go ahead and take this up to the 24.17 level. Maybe it's not going to do that. Your indication that it will, though, is if it gets down below a level of support. And support is really where old resistance was. And I'm going back to this candle right here, the week that began January 4th, because that was a shooting star, right? The opposite formed a hammer candle down here the week of January 18th. The opposite formed a shooting star previously the week of January 4th. So that really becomes our level of, in essence, support and resistance. But once price got above that area, and by the way, this did it with volume. Wide-ranging bar the week of August 1st had volume of 2.8 million shares, getting past a B point, which had 2.6 million shares. So that qualifies as a confirmed A to B equals CD. The upside, we can also see that prices come back to that old line of resistance at 2209, which is now support. So maybe the A to B equals CD to the downside happens. Maybe it doesn't. Where this is headed to, though, at this stage of the game says 24.72. So I hope that helps you navigate your trade inside of AAR, or at least answer what I believe that the charts are communicating to you and I. We've also got a question from, tell me if a long on UNG is okay with support and resistance. This is for Bill. So let's go take a look at it. Now, we're going to take a look at UNG. That really means we should be looking at the natural gas contract out here. Let me see if I can do this over here. Give me one moment. Natural gas. I just got the continuous, but that's okay. So over here, we've got the current contract for natural gas. Here's what this looks like to me. You've got a nice little rising price channel. This is the weekly. Hey, even better yet. Nice little rising price channel on the weekly. We'll see that on the daily. Let me switch over here to the daily chart and see what we see. Don't put C, put D for daily. There we go. So you can still see that rising price channel that's in place out here. I'm going to get rid of those retracements. What this had formed, you can see as price was coming down to the bottom of that price channel, this had formed a Gertley buy pattern. So that's really what's in play right now. There was the A to B equals CD to the downside. Let's get rid of that. So I would say that the way that this chart looks is, you've only got one little issue, one little area of resistance to get over, and that would be this little trend line basically, I'd say right here. In essence, you have traded into it right now. So, Bill, if you are into this trade, everything looks okay. What you really would like to see this do is get above that little descending trend line. If it does that, then price is going to go ahead and head up to the July 29th area, somewhere around the 283 to 291 level. And then above that, it'll head up towards the previous swing point and maybe even the top of that rising price channel. But first stop would be that July 1st area between 288 and 292. Now, I will go ahead and, another positive that says that level ought to be broken, that little trend line. You've got the price oscillator is rising, and it's above zero. So a rising price oscillator above zero is bullish out here. You just had a nice buy pattern, in essence, that came into play where it formed that little bullish engulfing candle. So that looks really pretty good. Now, I'll put UNG up on the screen, but it really was the natural gas contract that was giving you the best information out here, and therefore I wanted to give you the best information as well. Let's put the UNG up here. What does this mean that UNG ought to do? And if we're going to ask and look for levels of support or resistance, well, let's take a similar type trend line out here. And, see, it's a little off, which it should be. So this trend line is not as accurate as the one on the actual contract out here. But this would say, that this is shooting for July 29th. Ideally, you would like to see price or volume pick up, which that's about 6.4 million shares. You're about 5.5 today. You're not near that level. By the way, that level is 854. But that should become your target out here. Just watch the actual contract. With regard to levels of support or resistance, additional support or resistance for you, because that was really your question, I'm going to go ahead and just put up our TAS profiles, and you can see that its significant resistance level would say 862. Regarding support, you're really looking at about 798, and right now you're trading out at about $8.35. So you're fairly far away from a level of support out here in UNG. Watch the natural gas contract. If you can get above that little resistance zone, it should continue to move higher as we just discussed. So that was for Bill, and that was the UNG. That is the ETF for natural gas out there. Let me see what else came in. There was a question here about the GDX. See if you think the reverse 5-to-1 split will mean anything significant. No. So the question is, Steve, I'm in JDST and looking to see if you think the reverse 5-to-1 split will mean anything significant tomorrow. No, because JDST, the underlying instrument, is really, paying attention to, I believe JDST might be the HUI, the ARCA shares index out here. So that's in essence, if we put up JDST, that's what these guys do to JDST, right? Not JDUST, JDST out here. Let me see. This thing is trading at what, 571 right now. This thing has done, if I put this on a monthly chart for you, I'm sure we'll see many reverse splits, yeah. So here, this thing, that's in essence what these ETFs do out here, because, this thing has had enough reverse splits that one might pull up the chart and say, hey, look at this. This thing once was priced out at $3,378 out there. No, that's not the way that it actually worked. It's just the math involved with reverse splits out here. So don't sweat the reverse split. And does it have any meaning? Nothing that's going to affect the direction of the trade out there. Instead, you're going to be looking at really what we looked at with regard to the GDX, what it's doing, so on and so forth out here. Okay, so that should take care of, hopefully that takes care of your question, Tom, with regard to JDST. And hey, how about that? We have made it through the round of emails that have come in. I hope that I haven't missed yours. I don't think I have. And I don't think there's anything inside the Tiger's Den. So that says, hey, we get to close down the show early. Open up a bottle of bubbly. Actually, I can't drink bubbly. Dollars. So let's go see what's behind its move out here and whether that has any meaning. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Real quickly here, because we've got a couple of requests inside the den. I want to get to them since we're in our last segment. With regard to Fizz, F-I-Z-Z, it is forming a Gartley buy pattern today, completing the 1-1 A to B equals CD to the downside. Nice bullish engulfing candle out here. This thing can clear 52.45 or close towards its session high 53.83. That would suggest that price ought to then move up to, probably would have to say probably $61 and change out there. Now, the request is to take a look at the silver contract and to take a look at McDonald's. So let's go look at the silver contract out here real quickly, down 39 cents, $18.53. What we can see here is prices below the 1-to-1 A to B equals CD. The next area of price for it to target would be where it's at. So this is going to be interesting. And as we take a look at it, you can see that the price right now about at the bottom of its daily box, $18.55. Is this a buy? No, not just yet out here. We don't have any kind of bullish reversal signal, but it is up against an important level of support. That is on the current daily silver contract. With regard to McDonald's, MCD, the question is, has it found a bottom? And my answer is no, not just yet. Now, the reason is because there is no bullish reversal signal, and there is an A to B equals CD to the downside pattern that is in play. And so, Mitch, the A point is out here when prices moving higher, doing less relative energy. That was, I don't have the actual my crosshair up. Here's your B point you can see down here in the end of June. Your C point out here looks like around the end of July. So the 1-to-1 price projection is 112.72. You can see prices below my oscillator unchanged line out here, which is at 116.14. So everything suggests that no, McDonald's has not bottomed. Do we have a caller on the line, Steve? I've got to see a text. I am here. If we do, let's go to him. That's John in Philly. John, are you there?
Hey, Steve, real quickie for you as you close on up. Both HUI, the GDX, and gold are coming down.
Yes.
Can you make the very specific question, can you make the case to expect that these declines will test but hold above the May 2nd tops, and that was like 1305 on gold and 235 on the HUI. That was my question. I appreciate hearing your thoughts, and I will hang up and listen.
Absolutely. So thanks, John, for calling. Thanks for asking that question. And if I just take a look at the HUI, folks, I'll put up the level that he's looking at, which is May 2nd, which is $93.66 out here. And the way that I would answer that question is we took a look at the GDX. We know that price is moving into it with light volume, so that is a possibility that it's trying to find a bottom. We won't know the answer to that question here, John, unless we see, in my opinion, I won't know the answer to that unless I see some type of bullish reversal candle or signal, and that's not going to, doesn't look like that is going to happen today. Here's what we know. Here's probably the other big problem. Let's see if I can do this in 30 seconds. I want to just see what the Japanese yen is doing. The silver and gold are more likely, yen futures are more likely to form that bottom if, in fact, the yen futures don't turn to the downside. And right now they're giving us a message that they're trying to turn to the downside out here. This is the Japanese yen futures. You're seeing Stevie's red line out here, which is a significant level of support or resistance, tells us price oscillators turn down. And right now today, you got a bearish reversal signal, which makes sense because we've seen other bearish reversal signals up at these highs, up at these levels. And so this doesn't bode well for for that bottom that you're looking at. However, if price gets above that oscillator unchanged line, then says the move lower with light volume inside the GDX and moving above that, the answer would be yes. That's all I've got, folks. Stay tuned. Our man David White is up next. Have a wonderful Wednesday. We'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.